Have you ever noticed that every insurance company says they're great for contractors? Progressive says it, Traveler says it, Erie says it, Next says it. Everybody says it. But here's the problem: insurance companies all have different appetites. And the company that loves one type of contractor may absolutely hate another one. One carrier may aggressively want plumbers with three service trucks. Another might want large subcontractor heavy GCs. Another may only really work well for simple owner operator businesses that just need proof of insurance fast. So if you're a contractor in Maryland trying to figure out who's actually worth talking to in 2026, this video is going to save you a lot of time, frustration, and probably money too. Because most contractors buy insurance backwards. They start with price, they go online, get a few quotes, pick the cheapest option, and move on with their life. And honestly, I get why. Insurance is not exactly something contractors wake up excited to think about. But the problem is, insurance issues usually don't show up when you buy the policy, they show up later. They show up when a GC rejects your certificate wording 2 hours before a job starts. They show up when a workers' comp audit explodes, or they show up when your insurance company suddenly non renews you. They show up when you have a claim and realize your coverage doesn't really fit how your business operates. In Maryland specifically, this stuff matters even more now because contractors are dealing with stricter contract requirements, more scrutiny around subcontractors, and MHIC minimum liability limits just to stay compliant. So, in this video, I'll show you which contractor insurance companies in Maryland are actually best for small contractors versus larger, more complicated operations, how to avoid getting trapped with the wrong company when problems pop up later, and why some contractors eventually outgrow the fast online insurance options everybody talks about. But before we get into the actual companies, you need to understand something really important about contractor insurance. Picking an insurance company is a lot like picking tools. If you're hanging a picture frame in your house, you can probably get away with a cheap screwdriver from Walmart. But if you're a contractor using that same tool every single day on real job sites, eventually that thing's going to strip out, break, or slow you down at the worst possible time. Insurance works the same exact way. Some companies are built for speed and simplicity. They are great if you're a smaller contractor that mainly needs fast certificates, basic liability coverage, and a quick online checkout process. But the minute your business starts getting more complicated with more trucks and more employees, subcontractors, larger contracts, waivers of subrogation requirements, additional insured wording, suddenly the easy option can start becoming a bottleneck. And this is where contractors get frustrated because they think they're buying the same thing from every insurance company when they're not. They're buying completely different appetites, different service models, different claims experiences, and different levels of flexibility. So let's break these companies down by the type of contractor they tend to work best for. So let's start with the insurance companies most contractors see first nowadays, the online first insurance companies. And honestly, for the right type of contractor, some of these companies are excellent. I'm talking about companies like Next or biBerk, Progressive for commercial auto, and sometimes Geico for smaller commercial auto accounts. These companies have exploded over the last few years because they solve a very real problem. Contractors want insurance fast. They don't want three meetings. They don't want a 6 week underwriting process. They don't want to send 47 documents just to get a certificate. They want to go online, answer a few questions, buy coverage, and move on with their day. And if you're a smaller contractor with a relatively simple operation, that can honestly work really well. If you're an owner operator electrician with one van, a landscaper with two trucks, a handyman operation, a plumber doing mostly residential service work, these companies can be a really solid fit, especially if what you mainly need is general liability. Yeah, some workers' comp, maybe a one vehicle, and fast proof of insurance. That's where these online companies really shine. Take Next, for example. One thing they do really well is making certificates and additional insured requests incredibly easy. A lot of contractors can log in, generate COIs themselves, add additional insureds digitally, and move very quickly. And for small contractors trying to keep moving, that convenience matters a lot. And what's interesting is Next isn't just viewed as some tiny startup anymore either. Munich Re's Ergo acquired them, and AM Best upgraded their rating recently, which gives them a much stronger financial story than a lot of people realize. And then you've got biBerk, which is backed by Berkshire Hathaway. That's another important distinction because a lot of contractors hear online insurance company and they might think sketchy startup with no money behind it. And that's really not the case here. biBerk has very serious financial backing, strong ratings, and they've built a very straightforward online experience around contractor insurance. And then for commercial auto specifically, Progressive is absolutely massive in the contractor space. Honestly, if you drive around Maryland and look at contractor vans and pickups, there's a decent chance Progressive's somewhere in the mix. Part of that is because they're extremely competitive for light and mid-sized fleets, and they've built a system that handles contractor vehicle operations pretty efficiently. Geico can sometimes work similarly for very simple commercial auto setups too. Now, all of that sounds great. And for a lot of contractors, it is great, but here's where things start getting interesting. The easier the checkout process becomes, usually the less customized the solution becomes. And contractors often don't realize they've outgrown these companies until something breaks. Maybe a GC suddenly requires a blanket additional insured wording or a waiver of subrogation or primary non contributory wording per project aggregate language, completed operations. And now suddenly the simple online setup that worked perfectly for small jobs starts struggling under larger contract requirements. Or maybe the business grows faster than expected. Now you've got more employees, more trucks and subcontractors, larger projects, higher payroll, bigger claims exposure. And this is usually where the cracks start to show. Because when complicated insurance problems happen, there's often nobody really helping you strategically navigate the situation. You're mostly dealing directly with the insurance company. And a lot of contractors don't realize how valuable guidance is until they're already under pressure. I've seen contractors get into situations where everything was smooth for years until they got non-renewed or had a complicated claim. And suddenly they realized they didn't really have anybody helping them build a long-term market strategy. And that's the moment a lot of contractors start moving into the next tier of insurance companies. Now, the next tier of companies are what I'd call the captive or direct writer carriers. These are companies where you're usually buying directly from that company's own employee or agent. So instead of a broker shopping your account to multiple insurance companies, the agent primarily represents one company. This is where companies like Erie and Federated and sometimes State Farm start showing up a lot for contractors. And honestly, a lot of contractors love these companies, especially in the mid Atlantic. Erie, in particular, has a really strong reputation with a lot of artisan contractors around Maryland because they can package things together really well, including home and auto and umbrella and business insurance and workers' comp all under one roof with one relationship. And for a contractor that values simplicity and consistency, that can be extremely attractive, especially if you're a smaller to mid sized operation that's relatively stable. Erie also tends to have a pretty good reputation regionally for claims handling and contractor package business. They've spent a long time building products around service contractors and artisan trades, so they're not just some random company dabbling in construction. Federated is another interesting example because they tend to lean really hard into relationship based selling and risk management. A lot of established business owners like that style because it feels more personal. You've got somebody local. You know who your agent is. You call the same person every time. And honestly, there's a lot of value in that, especially if your business is fairly straightforward and you're not constantly changing operations every 6 months. Now, this is where I think contractors need to understand the big trade off with captive companies. The carrier is the marketplace. That's the idea. When you're working with a direct writer, you're largely committed to whatever appetite that company has at that moment in time. And that's perfectly fine until the company stops liking your kind of business. Maybe your losses go sideways, or your fleet gets bigger, or maybe they tighten underwriting on your type of contractor. Maybe they get nervous about roofing exposure or your workers' comp mod changes. And now suddenly the company that loved you 3 years ago says, yeah, we really don't want this anymore. So now what happens? You don't really have another market inside that agency to pivot to. So now you're trying to find a new broker, a new strategy, new carrier relationships, new underwriting options, usually while stressed out because you've already been non renewed. And this is something contractors rarely think about up front because when everything's going smoothly, Captive companies can feel amazing. The relationship feels strong, the process feels easy, everything feels organized. You don't really appreciate marketplace flexibility until you lose it. Now, to be fair, this problem only matters if the company relationship breaks down. And so for many contractors, it never does. That's why I still think these companies can be an excellent fit for contractors that want bundled personal and business relationships, that are stable artisan contractors with small fleets, and contractors that value relationship consistency and want a one stop shop simplicity. But once operations start getting more complicated with more subcontractors and larger projects, or multi state work, or complicated certificates, or larger vehicle schedules with higher umbrella limits, that's usually where independent broker markets start becoming really valuable. Now we get into the third category of companies. And honestly, this is where a lot of growing contractors eventually end up. These are the independent broker markets. And what's interesting is a lot of contractors have never even heard of some of these companies, even though they insure huge chunks of the construction industry. I'm talking about companies like Travelers, Selective, Cincinnati, Donegal, Utica, Mutual Benefit, Nationwide, and a whole bunch of others, depending on the broker. These companies usually don't spend a ton of money on advertising directly to consumers because brokers are their distribution system. And this is where understanding insurance company appetites becomes really important because every company has specific types of contractors they really want. One may aggressively pursue HVAC contractors, another may love plumbing risks, another might be great with masonry contractors or subcontractor heavy GCs, and then another company may look at the exact same operation and say, absolutely not, no way. Insurance companies are kind of like restaurants with really picky menus. Some carriers love the spicy food, others want nothing to do with it. And contractors don't realize how dramatically these appetites differ until they actually see multiple underwriters react to the same account. I've literally seen one company get excited about a contractor while another one declines the exact same company within 24 hours. And that's why independent broker access becomes so valuable as operations become more complicated. Because now the goal isn't just, can I buy insurance? Now the question becomes, which company is actually built for my operation? And this is where a strong independent broker can create a ton of value. Because instead of only having one company to work with, the broker can explore multiple appetites, create the competition, present your account strategically, negotiate structure, and find companies that fit the operation properly. That becomes really important once contractors start dealing with more advanced insurance needs. So things like inland marine for tools and equipment, builder's risk, large fleets, umbrella policies, sureties, multi-state operations, complex subcontractor setups, heavy certificate requirements. This is also where contract compliance starts becoming a much bigger deal because at this level, contractors are often dealing with requirements around additional insured wording, or waiver of subrogation, or primary and non contributory language, or per project aggregates, or completed operations, specific umbrella requirements. And one thing a lot of smaller contractors don't realize is that some insurance companies handle this stuff way better than others. Now, another reason independent broker markets matter in Maryland specifically is workers' compensation because workers' comp gets very sensitive as payroll grows, losses develop, or subcontractor usage increases. Maryland actually has a pretty competitive work comp marketplace overall, with over 100 insuring companies writing workers' comp in the state, and Chesapeake employers serving as the insurer of last resort. But that's not really fair because they actually do an excellent job and can be very competitive. And so, what matters and so all that matters because if your claims deteriorate or your experience mod changes, marketplace flexibility suddenly becomes a really big deal. This is usually the stage where the insurance company stops feeling like a yearly purchase and starts becoming part of the infrastructure of the business itself. Because now insurance affects job eligibility, your cash flow, your ability to hire or negotiate contracts, expand your fleet, and overall growth. Now, to be fair, these independent broker setups are not perfect either. There's usually more underwriting scrutiny and more paperwork and sometimes slower quoting. And the quality of the broker matters a lot because a weak broker shopping the markets can create a mess too. But for growing contractors or multi crew operations, businesses with heavy subcontractor usage, or contractors with more complicated risk profiles, this is usually where the most flexibility and long term stability starts to exist. So at this point, you're probably asking, okay, so how do I actually figure out which type of company is right for me? And honestly, I think this is where contractors can simplify the whole conversation because the goal is not to find the best insurance company. The goal is to find the company that best matches the complexity of your business right now. That's really the game. If you're a smaller contractor with simple operations and minimal subcontracting, and you need fast proof of insurance, then honestly, one of the online first companies may work perfectly fine for you. There's no reason to overcomplicate it. But if your operation starts getting more layered with more employees, payroll, jobs, more subcontractors, or contracts, now flexibility starts mattering a lot more than convenience. And this is where contractors can accidentally create problems for themselves because they keep trying to force a small contractor insurance setup onto a business that no longer operates like a small contractor. That's usually where the friction starts. Certificates take longer, contract requirements get rejected, and pricing becomes unstable. Claims get more heavily scrutinized, audits become painful, or the company starts quietly pulling away from the business class altogether. And this is another thing that contractors need to understand. Insurance companies change their appetites constantly. A company that wanted to aggressively pursue one type of contractor 3 years ago may suddenly decide they hate it the next year. Or they may still like contractors, but only certain trades, or only certain revenue sizes, or only certain loss profiles. And this is why I think contractors sometimes make a big mistake obsessing over brand names, because the best company for you today may not be the best company for you 2 years from now. Construction underwriting moves in cycles, and that's why the longer contractor stays in business, the more important strategy becomes, not just price, strategy. Questions like, does this company fit how my business is growing? How do they handle claims? How strong are they with contractor certificates? What if my losses deteriorate? What if I add crews? What happens if I start using more subcontractors? What happens if I expand geography? These are questions that start mattering. And honestly, this is where a really good broker becomes more valuable as the business becomes more complicated. Not because brokers are magical, but because complexity creates decision fatigue. There are too many moving parts with workers' comp and auto and umbrella and all that. And when all that starts stacking together, having somebody to help structure the strategy becomes a lot more useful. Because at the end of the day, the best contractor insurance company in Maryland for 2026 really depends on what stage your business is in. The mistake is assuming every contractor should buy insurance the exact same way. And one of the biggest examples of that, especially once contractors start growing, is how insurance companies look at 1099 subcontractors versus W 2 employees. Because that one distinction alone can actually destroy your workers' comp costs if you don't understand how the insurance companies calculate it. So, if you want to understand the biggest workers' comp cost traps contractors are falling into, watch this video right here on 1099 versus W 2 and how insurance companies actually look at subcontractor payroll.